All right, I'm going to do a market update, look at the stocks and metals. I think at this point it's pretty well defined that we got a double bottom in stocks and metals. Um, I speculated a while back that everything bottomed back here on September 24th, and it looks like that's going to hold. We've got a higher high in gold that confirms that this was a daily cycle low. And since this did not fall below this daily cycle low, that would indicate that this is a daily cycle low. So this is our intermediate cycle low. This is our first daily cycle. It unfolded as a double bottom. I'll show you the stock market here in a minute. It's got the same pattern. And now we're starting the second daily cycle, and I'll show you the dollar in a minute as well. The dollar is breaking down as expected, and this should drive everything higher. So quite often, the first daily cycle will be powerful enough to retest the highs from the previous intermediate cycle top. In this case, with the election and everything, that didn't happen. We just ended up with a double bottom. But breaking this high, this first daily cycle high right here, confirms this is a daily cycle low. This is the first daily cycle. We're starting the second daily cycle. The dollar is breaking down. So my expectation now is that this second daily cycle will probably come up and at least test these all-time highs before this second daily cycle tops. Moving on to the miners, you can see we've broken the intermediate trend line here in the miners, the confirmation that this is a final intermediate cycle low. This is not unusual to get a little, a marginal undercut like this. I've explained before why this happens. Big money anticipating a trend reversal will manufacture these breakdowns, and then as everybody panics and sells, that gives them the liquidity to buy into that panic selling and get into their long positions, and that's exactly what happened. And you can see we've got this violent move back up, and we've got a break of the trend line. We've got the same thing here in the juniors, a break of the trend line here as well. And oddly enough, one of the things that has started working very well for us in the SMT, the last several, other than the March low, but the last several intermediate cycle lows have unfolded as these frustrating sideways churns. And one of the byproducts of that, I guess you would say, is the novice type investors, or even just impatient intermediate degree investors will become frustrated during this. And one of my tools I use now to kind of try and spot when I think these are over is I will start to get cancellations as people get frustrated. And very often, when I get a wave of frustrated traders canceling their subscription, that pretty much marks the bottom, and it worked almost perfectly this past week. And as soon as those wrong way traders get frustrated, throw in the towel, then of course we get our bottom and we take off to the upside. And in the stock market, we've got that same pattern. As I said, September 24th looked like it was a bottom in everything. But same bottom happened here in the stock market. We get a strong rally, but doesn't quite make a higher high. And then we have to come down and retest that ahead of the election. And then once the election's over, the market is taken off to the upside. So I continue to think that stocks, this is probably a halfway midpoint consolidation volatility zone on our way to a bubble top. We haven't, this is the NASDAQ. This is where the bubble is going to be at, just like it was in 2000. But we haven't broken out of this volatility zone yet. So I'm not prepared to, say that we're ready to start the second strongly trending half of this bubble, similar to what happened right here. But we're in a position where we could, and we're starting the second daily cycle. It's very early in this daily cycle, so while there is a possibility for another dip and then a push through, it's also possible that we could just break through this next week, and then we're off to the races till I would guess April or May maybe would be when we would get our final top, and as I've said before, it's not out of the question that markets could rally, almost 100% during that last bubble phase. I mean, we did almost 100% from the March bottom to this top here in early September, and if this is a halfway zone, then we could expect something, a similar magnitude rally, once we break out of this volatility zone, and we are poised to do that next week. I don't know if we will or not. We may have to pull back some more, but we're on the verge. So if we get a strong move out of this consolidation zone next week, then I think we're headed much higher. And then finally, here's what I think is going to drive the bubble phase in stocks and the bull market in gold, which I do expect the stock market bubble to probably top, early spring, late spring of next year. The gold bull market, I think, will last longer. I think we're beginning an inflationary phase, maybe an extreme inflationary phase in the years ahead. And the gold bull market may go into 23 or even into 24 before it ends. But you can see here that, while everyone has been telling us that the dollar was the the cleanest dirty shirt in the laundry basket, or the prettiest pig in the pen, I've been pretty steadfast that was not the case, that the dollar had started a long-term bear market back in early 2017, and this spike here was the last attempt to rescue that bull market theory, and it failed. And we've now, you can see that this intermediate cycle low occurred well below this intermediate cycle low. This counter trend rally, which I was expecting, I kind of thought it might go a little further, though. I was thinking it might be able to rally up to this 95-96 resistance zone here before rolling over, but it's proving to be, the dollar is much weaker than even I was expecting, and it has already started to roll over. So you can see at this point we were making higher highs and higher lows. This was the advancing phase of the intermediate cycle, and we came down, made our first daily cycle low. This daily cycle has topped very quickly in a left translated fashion, and as of today it has broken below the previous daily cycle low. So we already have the second daily cycle is already in a left translated and failed configuration, and it's still very early in this daily cycle, only day 12. So we should break below this low, maybe even as early as sometime next week, and that will confirm another failed intermediate cycle in progress. And ultimately, there's little doubt in my mind that the dollar, probably by the spring of next year, is going to be testing or breaking below this low here, and then from there, then we'll probably get another significant bounce. But before this is all done, I think we're going to break below the 2008 low. So here's a long-term chart. I think this 3-year cycle low is going to break by the spring, and before this bear market is over, maybe in 24 or 25, I'm pretty convinced we're going to break below this 2008 low, and this is going to drive a huge inflationary phase, I think, in commodities, and especially gold and silver. And I think ultimately it's going to drive gold above $7,000 and maybe well above $7,000 before the bull market in gold is over.